Yeah, good morning, everyone. So yesterday we saw some profit booking in US market, and we saw some corrections over there. But Asian markets are indicating positive trend, and also the US futures are also indicating a positive trend. Apart from that, yesterday in G20 meeting, US President and President Joe Biden and China President uh, has indicated that they are not they need not be in new Cold War, and the Taiwan conflict may not be in near term. So that are giving some positive indications for the stability of geopolitical situations apart from Russia and Ukraine. So that has put up some sentiment positive in the Asian market today, and are indicating some positive trend. Apart from that, India CPI inflation yesterday has come, and that came more of a in line at 6.77 versus expectation of 6.7. So this is more on course of expected line. The RBI has indicated that the inflation will be coming off in third, fourth, and the coming year first quarter, and interest rates are already above the fourth quarter expectations of inflation of 5.7%, and the interest are at 5.9%. So upside from here may be limited on the interest rate count. Uh, and this CPI inflation is moving in line with expectations. Apart from that, OPEC has indicated that the demand is slow, and has reduced their projections, and that has some impact on the oil prices also. Oil prices corrected sharply from $97 yesterday, same time, to around $93. So overall, seems more of a positive sentiment, but uh, to a not really aggressive, but yeah, some sentiment is there. So which in Indian market as well. And I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. Today, Nifty is likely to open with a gap up by almost 40-50 points on the higher side, and we're likely to witness some positive momentum during the day. Yesterday, as we have seen that the Nifty has just opened with on a flat basis and just maintained a positive closing above 18,300 levels. Bank Nifty has witnessed some sort of a profit booking, but somehow it manages to maintain a positive closing above 42,200 levels, which gives some sort of a relief sign. Now, going ahead on the technical front, Nifty has an immediate resistance at around 18,440 levels. If it surpasses that level today on the closing basis, then 18,500, 18,570 levels can be seen on the higher side. Whereas on the downside, 18,270 will act as a strong support level. As long as Nifty sustains above that level, this pullback rally is likely to be continued towards 18,500 to 570 levels on the higher sides. Coming towards the Bank Nifty, 42,340 is the immediate resistance level. If it's clear that level, then 42,500, 42,640 levels can be seen on the higher levels, whereas on the downside, 42,100 and 41,900 are the crucial support we need to keep eye on it. If Bank Nifty maintains a closing below 42,000 psychological mark, then only we can witness some sort of a profit booking. The overall view on the Nifty and the Bank Nifty will remain a positive as long as it sustains about the mentioned support levels. Coming towards the Nifty Finance, 18,210 and 18,300 are the resistance level, whereas on the downside, 18,070 and 17,900 are the crucial support levels we need to keep eye on it. Coming towards the stock specific, as of now, Dabur looks good at the current market price. Stock is trading at around 553, 554 levels. One can take a long position in Dabur. We are looking for a target of 580. So one can take a trade at the current market price. Stop loss can be kept at 550 levels for a target of 580. That's it from my end. I request derivative guys to take a call for.
Yeah, thank you, madam. Good morning, everyone. So, as per derivatives data front, we are witnessing that Nifty is continuously facing resistance at the nearest level of 18,400. Currently, as per the yesterday OI position, also we are seeing that at 18,400 and 500 strike. Almost, if we combine both the OI position, almost around 5.5 million positions got added up of call writers at that strike. So, 18,400 will act as important resistance. So, yesterday also, if we see that on the Nifty basis, Nifty gave closing below 18,400 level on daily basis. From last 1 week, we are witnessing that Nifty is opening gap up note, and again we are witnessing a sell off in the second half. The same kind of situation we might witness in today's session also. We are seeing that Nifty is likely to open on a gap up note of around 50-60 points, but we expect the second half again the selling pressure can be witnessed, because at 18,200 and 300 strike put writer positions are getting unwinded. Whenever the put at positions gets unwinded and against that call at positions get added up, at that point of time we might witness some sort of profit booking or sell off in the market. While the another data point would be the PCROI on a Friday closing was 1.22, while yesterday PCR closed at 1.03 level. So the important supportive level for the PCR was at 1.15. It came down below that level, while the Nifty almost was around 50 points down in yesterday closing, but PCR almost dragged down by 0.20 points on the lower end. So once if PCR goes again above 1.15 level, and at that point of time, if index Nifty spot level goes above 18,400 level, then we might witness a strong momentum in the market. But currently in today's scenario, we expect some sort of profit booking. So view might be cautious. As per the stock specific, we expect three stock which looks very strong in the market. Currently, first would be the Coforge and Lupin. Both are initiated and recommended in yesterday trading session. So we can expect a long move and a buying perspective in these two counters. The another counter would be Exide Industry. We have seen a strong pullback in the Exide Industry after the result session. The support for the Exide was at 168 level. From that support, we have seen a strong buyback in this counter. Above level for this Exide would be 180. Once Exide was surpasses 180 level, then we expect a strong buying momentum in this counter towards 195 to 200 levels. So keep watch on this three counter. Thank you.
Good morning. Uh, Arman Financial result has improved on all fronts. AUM came at 1436 crores, up 58% year on year. The base is low, so this microfinance company can continue to grow at high rates going forward also. Gross NPA reduced to 3.3% against 3.6%, and net NPA is almost zero. The cumulative provision is also 5% of total AUM, so it is more than GNPA. So going forward, credit cost should remain subdued. And so everything looks good over here except for the valuation, where the company is trading at 4.3 times price to book. But it will remain so because of higher growth, as well as at higher multiples. The company keeps diluting and raising funds, so the book value keeps increasing. So if one is holding, one can continue to hold. If one is taking fresh position, we would recommend going for Ujjivan. We attended Time Technoplast con call. The result was okay. Top line growth was at 12% year on year. However, the bottom line was flattish because of a margin erosion on the back of raw material price increases. Our company said that they have passed on the raw material hikes, and in the second half, the margins should bounce back to last year's levels. And another thing, they said that there is a delay of 1 to 2 months regarding the majority stake sale in international business due to involvement of multiple countries in the transaction, and that company is confident of closing the deal within this current financial year. Once that happens, as earlier also we have been saying, the share of value-added products will increase from currently 24% to 35 to 40% in 2 to 3 years, which will result in expansion in margins and ROC, and therefore valuations will re-rate from current 12 times to 16 to 18 times going forward once the international business is sold. So one will have to keep patience until this event happens. We remain positive. Today, one IPO will be opening, Fusion Microfinance. It was subscribed 3 times. Issue price is 368 rupees. Total issue size is 1100 crores, 500 crores is OFS, and 600 crores fresh issue. The USP of Fusion is that rural makes up almost 91% of its AUM, where there is lesser competition and asset quality is better. And also company has got good corporate governance because of promoters who are PE investors like Warburg Pincus and Creation. And also since 2010, the auditor has been KPMG over here. On comparing it with other listed MFI companies, we note that Fusion has similar return ratios, ROE of 4%, 22%, and higher growth profile than peers, and is coming at a lower valuation of price to book of 1.8 times as on Q1, against peers who are trading at 3 to 3.5 times. A couple of negatives on this IPO are that they have higher exposure to the top two states are Bihar and UP, which are 19% each. And also during last 2 years, when all other peers were growing at around 18% CAGR, this company was growing at twice that rate at 37%. And during a period where there was COVID and the bottom of the pyramid customers were in pain, this could prove to be maybe counterproductive going forward. So maybe that is why we are seeing that listing is expected to be at issue price itself. There is not going to be any major listing gains. However, if somebody has got allotment, they can hold and monitor the situation for 1 to 2 quarters. If everything is stable and company's performance is good, then one can continue to hold. Thank you.
Good morning. Indocount has posted decline set of numbers for the quarter. Although the revenue improved, margins came in lower, which impacted the profitability of the company. Outlook is neutral. Himmat Singh posted below expectation numbers for the quarter, both on the revenue and the margin front. However, PAT improved to 33 crores versus QQ loss of 54 crores, majorly due to lower tax. Outlook is neutral on the company. Subex has posted declined set of numbers for the quarter, both on the revenue and the margin front. Thank you.
Good morning. Bharat Forge announced its result. The result was below expectation. Revenue came in at 1,864 crores versus an expectation of 1,810 crores, which grew by 6% sequentially and 16% on a YOY basis. EBITDA margin came in at 24.3% as against an expectation of 26.6%, mainly due to elevated raw material costs, finance costs, and employee costs. The demand across domestic and export segments remains stable. The company has won rupees $9 billion new orders during the quarter across domestic and export segments. The acquisition of JS Auto in the industrial segment, coupled with benefits of cost rationalization, should drive profitability over the medium term. Overseas business was impacted by macro headwinds, that is lower demand and high energy costs and supply chain constraints. The management expects operations to stabilize over the next 6 to 9 months. The company declared an interim dividend of rupees 1.5 per equity share at the rate of 75%. The stock is trading at a PE of 26.8 times FY24 EPS. Balkrishna Industries announced its result. The result was below expectation. Revenue came in at 2,704 crores as against an expectation of 2,491 crores, which grew 2% sequentially and 32% on a YY basis. EBITDA margin came in at 16.4%, which was below expectation of 20.2%. The recent price correction in raw materials and logistic costs bode well for the margin profile of the company. However, as guided, the benefits are expected to kick in from early Q4 of FY23. The global economic weakening coupled with sharp uptick in interest rates has also led to a reduction in order placement by the dealers and distributors. Sales volume guidance for FY23 stands at 3.2 lakh to 3.3 lakh metric tons. The current geopolitical challenges in Europe continues to be challenging for the company and thereby may have an effect on performance in the second half of FY23 as well. The stock is trading at a PE of 21.7 times FY24 EPS. Apollo Tyres announced its result. The result was marginally ahead of expectation. Revenue came in at 5,956 crores versus an expectation of 6,027 crores, which was flat sequentially, however, grew by 17% on a YOY basis, riding on the back of robust sales in the domestic as well as the international markets. EBITDA margin came in at 12% versus an expectation of 11.2%. The company said that both its Indian and European operations performed well. Tighter control on cost, better product mix, and timely price actions across markets helped the company offset the continued spike in raw material prices in Q1. The stock is trading at a PE of 13.9 times FY24 EPS. Thank you.
Good morning. Jyoti Labs Limited reported result above expectations. Revenue grew by 12.6% YOY at rupees 659 crore, and EBITDA margin reported at 12.2% versus the expectation of 11.2%. It has delivered a strong performance in fabric care on account of demand revival observed across all channels. Dishwash category continues to grow, where Exo and Pril is gaining the market share. In personal care, also, it has registered double-digit growth. However, there was a seasonal impact on the demand for household insecticides that led to volume degrowth. The company aims to focus on the supply chain and distribution initiatives to drive the incremental growth and the margins. The stock is trading at a 26.4 times to FY24 EPS, and we are positive on the stock for the near term. Bodil Chemicals Limited result was decline. Revenue stood at rupees 396 crore, which degrew by 15.7% YOY, and EBITDA margin reported at 8.1% as against 10.3% YOY. The revenue degrowth was largely impacted due to subdued performance in dye intermediates, which was offset by a strong performance in caustic soda. Decline in average prices of its key product and rise in power, fuel, and logistic cost has impacted the overall margins for the quarter. The stock is trading at a PE of 9.1 times to TTM EPS, and currently we are neutral on the stock. Aarti Industries Limited posted result below expectations. The revenue reported at 1,686 crore, which grew by 34.4% YOY and 5% QOQ. EBITDA margin reported at 15.9% versus the expectation of 18.4%. The more updates on the company's result will be shared in the con call scheduled today. Thank you.
Yeah, the commodity team can take over from here now. Harshal.
Yeah, thank you, sir. Good morning, everyone. We expect commodity prices to edge higher, especially gold and silver. Gold one can buy around 52,500 with a stop loss of 52,300. Prices are likely to test 53,000, 53,200 on higher end. Silver prices, we expect prices to rally further, 63,200, 63,500 on higher end. So buying on dip is recommended around 62,100 to 62,000, maintaining a stop loss of 61,500. Crude oil have been under pressure since it is sustaining below 7,200. However, 6,900 seems to be a good support area, and prices could bounce back. So overall, prices could be in a range from 69 to 7,050. And if prices sustain below 6,900, then one should be cautious in long positions. And natural gas, we feel on higher end, the selling pressure has been witnessed, and one can sell around 500 to 502 levels, and maintaining a stop loss of 515. Prices could test the support area of 480 to 475 on lower end. In a metal front, uh, zinc and aluminum has been witnessing a good move upside. However, copper have been witnessing profit taking from higher end. So in copper, we recommend to sell around 701, 702 levels with a stop loss of 707, and prices could be supportive at 690 to 690 level, whereby again buying can be witnessed. So overall, zinc can be bought around 277 to 7750 levels, and one can maintain a stop loss of 275. Prices can test 280 to 283 on higher end, and aluminum also we recommend to go long around 210 levels with a stop loss of 208, and prices can test 2013 on higher end. Yeah, that's it from me. I'll ask Ria to take off from here.
Thank you, sir. Good morning, everyone. So on the currency front, we are seeing a flat open into the USD INR at around 81.24. If you look at the dollar index, it has again come towards the level of 107 from the lows that it had seen yesterday. We could see some pullback into the dollar index as well towards the level of 107.50, 108 levels. That is the level that it should hold on to. Similarly, for the USD INR, right now, it is trading at around 81.24, and I think the base that it has formed around 80.30, 80.20, testing the lows in one of the sessions, that should be the base that I think it will be followed through. Any breakdown from those levels, RBI will come in to build up its reserves, and we could see some dollar buying happening, because if you look at the forex reserves, almost $100 billion from the forex reserves has been poured into towards safeguarding the volatile currency market, as well as to safeguard a rapid depreciation into the Indian rupee. Thus, 80.20 should be taken as a support on a medium term, and I think any breakdown from that, RBI will come in to buy dollars, and it will again push the rupee towards within the range of 80 to 81. So 80 to 81 is a longer term horizon. In the intraday session, 81.35 is the resistance. If the pair moves above it, gives a breakout to this resistance, you will see it moving towards 81.60. So you can go long for the same. 81.05 is the support. Below that, it could again test the lows of 80.80. In other pairs, for JPY INR, we are seeing it open flat as well at around 57.93. GDP numbers have come on a negative side. Contraction is seen into the Japan. It could put some pressure into on the Japanese yen. In today's session, you could see a resistance in the JPY INR at around 58.11. And any breakout to that could lead the pair towards 58.26, 58.50. Support is at 57.65. For Euro INR, 83.83, it is currently trading at. We could, if it gives a breakout to 84.10, it could move towards 84.44. So remember, so you can go long for the same. 60 is the pair is a support. For GBP INR, you could see it if it gives a breakdown to 95.55, it could again test the lows of 95. So look for a breakdown to that in order to go short into the pair. That's all on the currency front. Thank you.